I've been investing $15 a day into the Vanguard VOO ETF for over 365 days, and the results honestly surprised me. Over the past year, I've shared updates at the 100, 200, and 300 day marks, but now that we've hit a full year, the data tells an even more interesting story. Let's dive right in. Let me first explain how this all started in the first place. When I first began investing, everyone talked about the S&P 500, an index of the top 500 US companies with a long history of steady growth. But while I was growing my own position, I became curious. What would happen if I dollar cost averaged into the S&P 500 every single day? That curiosity led me to open a new VOO position with recurring $15 daily purchases. And to answer a question I get all the time, yes, my brokerage charges no fees for these trades. I'm sure most of you already know what the S&P 500 is, but for anyone new here, here's a quick rundown. The S&P 500 is short for the Standards and Poor's 500, and it tracks the performance of 500 leading US companies. These are major household names like Nvidia, Microsoft, Apple, Amazon, Google, and many more. Next, you might be wondering, how do you actually invest in the S&P 500? There are several ETFs that track it. Some popular ones include VOO, IVV, and SPY. I personally chose VOO because it has one of the lowest expense ratios, and I generally prefer Vanguard's funds. Another reason the S&P 500 is so popular is its impressive long-term performance. Over the last 30 to 50 years, it has averaged around 7 to 10% returns annually. Of course, that doesn't mean it goes up every single year. It's not something that's linear. But if you look at this chart, some of the years have returned 15 to 20%, while others have seen negative returns. But over time, it averages out to that 7 to 10% range, which is why so many investors choose to hold these S&P 500 ETFs for decades. Alright, now let's dive into the experiment. It all started with my first $15 purchase on September 23rd, 2024. Since then, I've been buying tiny fractions of VOO every single trading day. 1 year ago, VOO was trading around $525 per share, and since then, it's been steadily climbing in value. But before I show you the results after 1 year, let's look at how this investment had grown in the first few updates. In one of my first updates after 50 days, VOO was climbing steadily. I had invested about $690 and this was up about 3.35%. My average cost was around $534 per share. But by day 100, things had flipped quite significantly. My position was now worth around $1,544, but I was actually down 2.7%, with my average cost rising to $543. The strategy was off to a rocky start, but I wanted to stay true to my initial goal of allowing these recurring purchases to continue regardless of market conditions. Now, around the halfway point of this experiment, at roughly the 200-day mark, I had invested roughly $2,950 into this position, and my average price was still sitting around $538 per share. At this time, my investment was up about $270 or 9.15%, which was starting to look promising as dollar cost averaging continued. Finally, this brings us to day 365, or 1 year of dollar cost averaging into VOO. And using this strategy, I am currently up about 9.12% on this position, which represents about $335 in total. The timing of this update is a bit interesting since VOO was 2% higher a little earlier this week, but it took a little bit of a dip at the time I'm recording this video. Either way, this position is still in the green. When I first started this experiment, one of the things I was most curious about was whether or not I would actually achieve this 7 to 10% return range even though I was dollar cost averaging. And in my scenario, we are right in the middle of this range at about 9.12% in returns. I think this says a lot about the power of small, consistent purchases. There were several times throughout these 365 days where I forgot about the recurring orders altogether, which really allowed this position to grow on autopilot for a while. Something you might be wondering is how this position would have compared to a lump sum investment. I started this investment on September 23rd, 2024, so I'll use a total returns calculator to check this. The results yield about a 15% return. But here's the thing, at the start of this experiment, I didn't have $3,700 in cash just sitting around. Like most people, I get paid bi-weekly, so this experiment reflects how I'd realistically invest over time. Plus, it takes the pressure off trying to time the market. During this period, you'll see that VOO has dipped several times, with lows at $450 per share and highs as much as $615. With lump sum investing, your outcome heavily depends on when you buy, but with dollar cost averaging, the price averages out, you stay consistent, and for me, it provides a little more peace of mind. So how long should I keep this experiment going? We just hit the 1 year mark, so I do have a good amount of data now, but I'm curious, would you want to see any more updates on this position? I'll be continuing this journey a little bit longer, but I'm not sure at what point I will stop, so let me know what you think in the comments below. And if you enjoyed the video, make sure to hit that like button and subscribe if you haven't already. Thanks for watching, and I'll see you in the next update.